Hello and welcome everyone to the week ahead commodity report for the 22nd to the 26th of July, presented by myself, Phil Carr, at the Gold and Silver Club. So first of all, what do you need to know as we go into next week? We have seen in the latest week gold prices breaking out to $1,450 per ounce for the first time since May of 2013, breaking out to 6-year highs after comments from the New York Fed President John Williams, which have fueled expectation of an even deeper rate cut at the FOMC statement, which is scheduled to take place later on this month. With that, we saw the US dollar last week breaking down to 2-week lows. Meanwhile, silver prices, they broke out to $16.57 per ounce, the highest level since June the 25th of 2018. In fact, silver prices at the peak last week rose over 8%, the best week in 3 years, whilst platinum surged to 2-month highs, trading at $864 per ounce. Again, I hope a lot of you did capitalize on these moves in the latest week. For everybody who watched both our week ahead report and also gold asset of the day, we discussed in detail that we were looking to buy back into gold at $1,400 per ounce. In fact, we banked 500 points profit on our long position on Thursday. A lot of traders out there were shorting gold, looking at a potential triple top from a technical point of view. We mentioned our data, our research and intelligence was showing that 1400 was a very key magnetic level for gold, and you really wanted to look for evidence of buying at that level, not selling. So well done to all of you who have capitalized on that move. Oil prices also gained on Friday, trading back above $56 per barrel after Iran's Revolutionary Guard said on Friday they had captured a British flagged oil tanker in the Gulf. This, of course, is after Britain seized Iran vessel this month, ratcheting up tensions along a vital international oil shipping route. We have also seen hedge funds and money managers, they have raised their bullish stance in COMEX gold in the latest week, and they have also significantly increased their net long positions in US crude oil. So with that, we'll move over to the charts and we'll talk you through the key levels and what we're looking at as we go into next week. First of all, starting off with gold, as we go into next week, you need to be aware that hedge funds and money managers, they have again bought into gold in the latest week. We discussed in detail where we were looking at buying opportunities at $1,400 per ounce. We tapped 1400 this week. We got in long at $1,403 per ounce on our second position, and our previous position of $1,397 per ounce, that was banked for 500 points on a tap up towards 1,450 last week. Now we still have another position running going into next week, which is up approximately 220 points now as we go into next week with the stop loss protected. In fact, the platinum trade that we discussed with you in detail the previous week, that rallied up over 500 points in our direction last week with the breakout towards those 2-month highs. So it just really shows the importance of research driven trading. We've discussed with you previously, you want to be aware of what the smart money is doing in this market. You also want to look at the seasonal cycles. Typically, this is not a good time of year to be looking to short gold. Even from a technical point of view, if you're perceiving triple tops in the market or if you're using outdated technical analysis, you really need a stronger edge in these markets. That is not going to give you enough of an edge. You need to really be looking at the cycles, the seasonals, market intelligence, what the hedge funds are doing versus the retail traders. Marry that up with the flow of the markets. That way you give yourself a much better chance to be profitable in this market. So with that, let's get back to gold. So with gold right now trading at $1,425 per ounce, what I would look out for as we go into next week on gold is on Thursday we have the European Central Bank announcement. The following week on the Wednesday we have the FOMC statement. You want to watch that very carefully. Now we'll be going through gold in more detail with you on asset of the day next week. We'll go through what we're forecasting for the week ahead, but at the moment it's been a great breakout in the latest week. I hope you've capitalized on that move, and we're consolidating mid-range at the moment, and I would be looking out for this evidence of hedge funds and money managers which have again bought in the latest week, buying on any dips in price. So just be mindful of that as we go into next week that we might see shallow retracements, but we'll go into more detail with you on that on gold asset of the day. Platinum, I want to go back to this because we have in fact hit the upper end of the channel, which is what we discussed with you on last week's report. Feel free to go back and watch that, where the close on last Friday, platinum was trading at $834 per ounce. We mentioned to you that we've been long at $811 per ounce. In fact, the previous week we outlined with you in detail where look at buying opportunities between $790 up to $810 per ounce here. We have springboarded off that layer of support yet again here, and you can see very clearly on platinum where we are getting the higher lows, and we've just come up and tapped the upper end of the range here last week. In fact, platinum now we have banked 3/4 of the profit of this trade. As we go into next week, we are currently up over 380 points on that position, and we had that additional follow through move that we've been anticipating, tap the upper end of this channel, and we're getting a bit of a pullback as we go into next week. Hedge funds and money managers, they have started to increase again their net longs on platinum in the latest week. So I want to observe whether we're going to just see shallow retracements, and also be watching out for the price action as we get into Thursday's European Central Bank announcement. And as I mentioned, the FOMC statement at the end of the month as well. Our stop loss is protected on this trade. We've banked 3/4 of our profits. Just be aware that moving forward, when you do get back down to that 800 to 810 zone, it has historically provided some great opportunities. The non-farm payrolls at the beginning of this month provided us a great opportunity to buy back in after that 3% decline, taking the price back to $807 to $810, buying back in. We've now hit the targets that we've been anticipating on platinum. But then let me move you over to crude oil. So for me, crude oil is really the one to have on the radar as we go into next week, alongside gold, of course, as well. So crude oil, last week we have seen over a $5 decline in price. If you go back again and watch last week's report, we had suggested that we would be looking out for the potential of a pullback here, coming back towards these previous levels of support. We were starting to see consolidation at the upper end of this range. We had paused in price, and we'd hit that 60 level that we had been anticipating on the breakout here, back towards that $60 per barrel handle for crude oil. Oil tends to move very well within those $5 levels. So essentially we've broken out from 55, broken back to 60, and then we've rolled over, pulled back to 55, and again finding support. So a few points to note on oil going into next week. Hedge funds and money managers, they have increased their net long positions quite significantly in the latest week, but that's not evidence yet on the chart. So going to next week, we do have a bullish bias here on oil. We formed a indecision candle here on Friday. We have certainly springboarded off the $55 per barrel level, previous level of support now, and previous level of resistance, now turning support around that $55 handle. So you can see now turned into a level of resistance where we're bouncing off that level as we go into next week. Now, it's not a great idea to be looking to go long ahead of a weekend where you can get some gapping. So as we go into next week, I do want to look out for evidence of buying around this $55 per barrel handle. If you look at where we've closed here, $55.75. If we pull back again to 55, I want to look out for whether we will see buyers at that level, or whether we get any slight flash out in price, just tapping the lower end of this Keltner channel, then potentially seeing buyers come back in around that zone. So whether we get a flash out in price and then buying, or we may just very simply start to springboard higher as we go into next week, particularly if we break back above Friday's highs here. We could just have very simply a morning star formation, start to build up momentum, and then make a move back towards the upper end of that channel as well. From a seasonal point of view, typically oil, it's very common to get a correction here in the first couple of weeks of July, and then consolidate and build up momentum to the upside as we go into August. So I'm watching out for this. And of course, the US dollar index as well, which broke down to 2-week lows last week, but had a retrace on Friday higher. If the US dollar, if we did see any weakness going into next week, that's a very key point to keep an eye on as well. US dollar weakness can provide support for oil. Of course, on Tuesday we have the API data, and on Wednesday we have the crude oil inventory data as well. So you want to also watch out for those data points. So I would definitely watch oil here at $55 per barrel. Again, you really want to look out for that evidence of buyers coming in though. You don't want to catch a falling knife if the price was to roll over and show no evidence of buyers. But I am looking to see whether we will get buying momentum here. Hedge funds have started to increase their net longs quite sharply in the latest week, but that hasn't really followed through into price yet. With oil dropping $5 in the latest week, we could see this be just a great buy opportunity here and see whether the price does springboard higher as we go into next week. So that's what I would look out for, certainly on oil as we go into a new week. So with that, I wish you all good trading for the week ahead. As I mentioned, I hope a lot of you have capitalized on the recent breakouts that we've had here with respect to platinum, with respect to gold, and also the sell-off that we've seen with oil in the latest week. So if you would like to learn a research-driven process in the markets following 3 key strategies. So we're looking at market sentiment, trade flow, what the hedge funds and money managers are doing in the market versus the retail traders. So really the smart money in this market. You want to be on the right side of what the big money is doing and marry that up with fundamentals and technicals, then generating a trade idea that gives you an edge in these markets. If you would like to find out more and join a community of successful traders, there is an opportunity for you to do so. As a member of the Gold and Silver Club, you learn a research-driven approach to the markets. Members get access to our exclusive live trading room webinars. You have real-time trade alerts, access to real-time trading research, market insights, access to our private members academy membership site, and also support and one-to-one mentoring. For more information about the service, just go to www.jointhelivetradingroom.com. The link to make an application is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And of course, do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.